Hi everyone, I'm Michaela Dowdy and I am one of the financial advisors here at Wiser Wealth Management. Today we will be talking about what is the loophole for the step up in basis for inherited assets. Now, when I say the term loophole, that doesn't actually mean that we're talking about anything nefarious here, any sort of loophole in the tax code. This is in fact just in the code of law for taxes. So you're not doing anything here as a loophole per se, but it is something that if you're not aware of it, it can feel like a loophole. So when we're talking about the step up in basis, you may be wondering, well, what in the world is basis? So basis is in terms of stock, typically, even in a home or real estate purchase as well. So think of it as your grandmother purchased holdings of Walmart in 1990 for, we're just going to say arbitrarily $100. Well, now let's say she passes unexpectedly or expectedly, passes, and the fair market value of that is now $300 or so. Of course, this is not actual amounts for Walmart, but just using this as an example. So that fair market value is now $300. Well, say that now you're set to inherit those assets. The basis can make you think, oh, well, I'm inheriting it at her basis, her purchase price of $100. But really, you're inheriting it at the fair market value price of $300. So that's where this is really crucial information to understand, especially if you know you're either going to be giving an inheritance of assets or you are going to be on the receiving end of the inheritance of assets. You want to make sure that you're taking this into consideration, because really what's happening here is you can have a gain that really doesn't officially ever get realized at some point, because the step up is happening for you as the beneficiary of the assets. So while grandma got it at 100, you're actually going to have that basis for yourself at 300. So if you were to sell Walmart later, say a year later, and the price has gone up $50, it's now $350. Well, now you're only paying the basis, that gain of $50. You're not going to be paying tax on the full gain of, $100 to $350 of $250. So that is a massive, massive benefit. It's also great if you're inheriting those assets and you want to reallocate all of those holdings, because as soon as you inherit those, you're going to have pretty much no gain or loss in those accounts. You're going to receive them at that fair market value. Therefore, if you're wanting to rebalance your portfolio to maximize your goals in retirement, then that's where you can go ahead and reallocate it to match your financial plan and not necessarily realize a bunch of gains or losses in any way. So this is a very crucial thing to understand overall when you're inheriting assets or going ahead and planning ahead for your family members if you know you're going to be giving them assets in the future at your death. Now, of course, this does not apply to gifting assets. Those are still taxed. So do not think that this is being confused with that. That's another topic. But as far as inheriting assets, there is a step up in basis. So make sure that you understand that to its full extent. And if you still have questions, then of course contact a financial advisor or planner to get on their calendar and discuss it with your financial plan in mind. We are happy to do so at Wiser Wealth Management, and thank you for watching.